Joining me now is Emily Roland. She's co-chief investment strategist at John Hancock Investment Management. And Emily, your interest in this sector, to me, jibes with what we just heard from Brooklyn about the strength of the consumer.
Absolutely, Kelly. So demand is clearly remaining robust. And what we're looking for right now to play this accelerating growth environment and clearly elevated inflation pressures is at the value and the cyclical side of the market. But not all cyclicals are created equal. What we're looking for now is really fading those lower quality winners of late 2021, early 2022, and looking at this sort of intersection of value and quality. So what we want to do is own companies and sectors that have great earnings growth prospects. We want to look for companies that have high operating leverage. So think about a company that has significant investment in property, plant, and equipment, who doesn't need to make much additional investment in that fixed asset, but can pass those prices along. So we see that pricing power as really being a key element of the story here. And we're finding that really in the industrial sector. Yeah. This is a sector that's got great return on equity, strong balance sheets, and again, that pricing power that we're looking for as inflation remains elevated.
We had a guest the other day, more of a technical trader, but who said that industrials often outperform in the first 6 months of a rate hike cycle, which we haven't even begun yet. How much of the strength is already playing out? I mean, after UPS's move on earnings the other day, people probably wish they were in it before that.
Yeah, I mean, industrials has started to sort of catch some footing here early in 2022. It was an overweight of ours last year, and we were a little bit surprised by the disappointing performance last year. But I think what's really interesting, given this rate hike environment, is industrials is a sector that actually doesn't need a steeper yield curve. So our view going into 2022 is that you'll actually see the yield curve, which is flattened by a considerable degree already, remain flat as the short end of the curve moves higher. The long end stays range bound as economic growth moderates throughout the year. A lot of cyclical parts of the market are actually very much dependent on higher rates and higher inflation to show leadership. And industrials is one of those sectors that can grow organically and doesn't necessarily need that. The other element here is just earnings growth. You know, last year we think about it being almost earnings nirvana. You know, we saw 45% earnings growth for the S&P 500. Now we're looking at mid single digits, high single digit earnings growth. The industrial sector is penciled in to see about 35% earnings growth in 2022. So that's where we want to look for those opportunities.